Hello everyone, I hope you are all doing well. Today we are going to discuss a very interesting and important topic for every investor and trader: global stock market timings. Imagine the world's stock markets as a series of giant interconnected shops. Each shop opens and closes at a different time, depending on where it is located in the world. As one market closes in one part of the world, another one is just opening its doors for business somewhere else. This continuous cycle of opening and closing creates a 24-hour marketplace, offering constant opportunities and risks for people who invest their money in stocks. Why should we, sitting here in India, care about when a market opens in New York or Tokyo? The reason is simple. The world is connected. What happens in one major economy can create ripples that affect markets everywhere else, including our own national stock exchange and Bombay Stock Exchange. A big announcement from a US company can influence the share price of an Indian IT company. A policy change in China could affect metal stocks in India. Understanding these timings helps us to anticipate market movements and make more informed decisions with our hard-earned money. Think of it like being a cricket fan. You need to know the match schedule to watch your favorite team play, right? Similarly, as an investor, you need to know the market schedule to track your investments and catch important events as they happen. Knowing when the US market opens allows you to see how global sentiment might affect the Indian market the next morning. It helps you prepare a plan. This knowledge is not just for professional traders, it is a fundamental tool for anyone who wants to build wealth through the stock market and be a smart, proactive investor. In this guide, we will break down the trading hours of major global stock exchanges, all converted to our own Indian Standard Time. We will look at what makes each market unique and, most importantly, explore how their timings overlap. This will help you understand when the global markets are most active and buzzing with activity. By the end of this discussion, you will have a clear roadmap of the global financial day, empowering you to navigate the international investing landscape with much more confidence and strategic insight. Let's begin our world tour of stock markets, starting right here at home. In India, our main exchanges, the NSE and BSE, operate from 9:15 a.m. to 3:30 p.m. Indian Standard Time. The key benchmark index that we all track very closely is the Nifty 50, which represents the 50 largest and most liquid companies listed on the NSE. A unique feature of our market is the concept of pre-open and post-close sessions. The pre-open session, from 9 o'clock a.m. to 9:15 a.m., helps in price discovery and minimizing the volatility that can occur right at the market opening, which is a very useful mechanism for stabilizing prices. Next, we fly east to Japan. The Tokyo Stock Exchange opens much earlier for us, running from 5:30 a.m. to 11:30 a.m. Indian Standard Time. Their main index is the Nikkei 225. One very interesting feature of the Japanese market is its strong focus on large, export-oriented industrial and technology companies like Toyota and Sony. What happens with the Japanese yen and global trade policies has a very direct and significant impact on the Nikkei's performance. Its early opening time gives Indian traders the very first clues about how Asian markets might behave for the rest of the day. Now let's look at the other major Asian power, China. The Shanghai Stock Exchange operates from 7 o'clock a.m. to 12:30 p.m. Indian Standard Time. Its primary index is the Shanghai Composite Index. A unique aspect of the Chinese market is that it is heavily influenced by government policies and regulations. It is also less accessible to foreign investors compared to other major markets, with specific schemes like the Stock Connect program allowing international participation. Its movements are closely watched for insights into the health of the world's second largest economy, which has a big impact on global demand. Finally, we move to Europe and the Americas. The London Stock Exchange in the UK opens from 1:30 p.m. to 10 o'clock p.m. Indian Standard Time, and its key index is the FTSE 100. A unique feature is its history and its position as a global hub for international companies and finance. In the United States, the New York Stock Exchange and Nasdaq open from 7 o'clock p.m. to 1:30 a.m. Indian Standard Time. Their main indices are the Dow Jones, S&P 500, and Nasdaq Composite. The US market is the largest in the world, and its unique feature is its global dominance. Its movements set the tone for markets worldwide. Now that we know the individual timings, let's talk about the most exciting part, the overlap. This is the period when multiple major markets are open for business at the same time. These overlaps are incredibly important because they lead to higher trading volume and liquidity. Liquidity simply means how easily you can buy or sell a stock without causing a big change in its price. When more people are trading across different time zones, there are more buyers and sellers available, making transactions smoother and more efficient for everyone involved in the market. The first major overlap for Indian traders happens in the afternoon. Around 1:30 p.m. Indian Standard Time, the European markets, including London, start their day while our Indian market is still active for another 2 hours. This period, from 1:30 p.m. to 3:30 p.m. Indian Standard Time, can be very dynamic. News and events from Europe can immediately influence the sentiment in the Indian market, leading to increased volatility and trading activity. For example, if the European markets open with strong positive news, you might see a late afternoon rally in the Indian indices as traders react to the global cues. The most significant overlap on a global scale occurs when the European and American markets are open together. This happens from around 7 o'clock p.m. to 10 o'clock p.m. Indian Standard Time. This 3-hour window is often the most liquid and active period in the entire 24-hour trading cycle. Billions of dollars are traded as investors and institutions from two of the world's largest economic zones interact. For Indian investors who trade in US stocks or track global trends, this is the prime time to watch. Major economic data from the US is often released during this period, causing significant price swings. Why does this matter so much? High liquidity during overlaps means that the bid-ask spread, the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept, tends to be narrower. This makes trading cheaper. Furthermore, the high volume means that prices are more representative of the true market value, as they are being set by a much larger and more diverse group of participants. For an Indian trader, understanding these peak activity zones is crucial for executing large trades or for reacting to global news with precision. So, how can we use all this information to become smarter investors? First, understanding market timings helps you plan your day. If you are an active trader, you know that the opening hour of the Indian market, 9:15 a.m. to 10:15 a.m., and the closing hour, 2:30 p.m. to 3:30 p.m., are usually the most volatile. By also knowing that European markets open at 1:30 p.m. Indian Standard Time, you can prepare for a potential increase in activity in the late afternoon. This allows you to create a trading strategy that anticipates these periods of high volume and potential price movements, rather than just reacting to them blindly. Second, this knowledge helps in managing risk. Let's say you are holding a large position in an Indian IT stock. Since Indian IT companies earn a lot of their revenue from the US, their stock prices are heavily influenced by the US market. By tracking the US market opening at 7 o'clock p.m. Indian Standard Time, you can get an early indication of how your IT stocks might perform when the Indian market opens the next day. If the US tech index, NASDAQ, has a bad day, you can prepare a strategy to protect your portfolio from a potential gap-down opening in India the following morning. Furthermore, for those interested in diversifying their portfolio by investing directly in international stocks, these timings are absolutely essential. If you wish to trade stocks listed on the New York Stock Exchange, you must be active during the US market hours, from 7 o'clock p.m. to 1:30 a.m. Indian Standard Time. Knowing this allows you to set aside time to research, place orders, and monitor your international investments effectively. It helps you participate in the global economy directly, opening up a much wider range of investment opportunities beyond our domestic market, and allowing for true geographical diversification. In conclusion, knowing the timings of global stock markets is not just a piece of trivia. It is a powerful strategic tool. It transforms you from a passive investor into an informed and proactive market participant. It helps you understand the flow of money and information across the globe, See how interconnected financial worlds truly are, and use that knowledge to make timely and intelligent decisions. By aligning your trading and investment activities with the global market clock, you give yourself a significant edge in the journey of wealth creation. Happy investing!